Get ready for an upward thrust. Gift Nifty's massive 312-point gap up and strong institutional buying signal a bullish open for your Trade Vision pre-market report. Good morning, traders. Welcome to Trade Vision pre-market report. Today, 2026, July 29th, Wednesday, dawns as another vibrant opportunity. Let us deep dive into the detailed reports. The Trump administration has enacted new tariffs, 10% to 12.5%, on imports from 60 U.S. trade partners, replacing an expired temporary global tariff. This action, already facing legal challenges, injects fresh uncertainty into global trade flows and could weigh on India's export-oriented sectors, particularly those reliant on global supply chains, prompting closer scrutiny of trade policies. Asian markets saw a significant sell-off in technology shares, with South Korea's Kospi plummeting over 10% and Japan's Nikkei down 4%, fueled by concerns over AI-related borrowing levels and China's advancements in chip technology. This global tech sector unease could weigh on India's IT and semiconductor-related stocks, potentially leading to a cautious opening for the broader technology index. The Reserve Bank of India executed a 20,000 crore rupee government securities buyback on Tuesday, aiming to infuse liquidity into the banking system. This action addresses the recent narrowing of surplus liquidity post-GST outflows, keeping the door open for easing pressure on short-term money market rates. It may lend support to bond yields and financial sector stability today. India's industrial production accelerated to 7.3% in June, driven significantly by robust manufacturing and electricity and gas supply sectors. Strong performance in capital goods, up 14.2%, puts the spotlight on continued investment activity. This strong indicator may lend support to industrial and manufacturing stocks, reflecting healthy economic momentum as markets open. Prime Minister Modi chaired a high-level meeting to review economic reforms and policy proposals aimed at shielding India's economy and supply chains from the ongoing West Asia crisis. Emphasizing technological self-reliance and domestic capabilities, this proactive government stance signals heightened attention to geopolitical risks. It could weigh on sectors dependent on global supply chains or energy imports, while potentially lending support to domestic manufacturing. The United States and Iran have mutually paused military strikes, fostering cautious optimism for de-escalation as Oman advances a proposal for joint regional management of the critical Strait of Hormuz. This development has seen global oil prices ease, which could translate into reduced imported inflation pressures for India, potentially lending support to consumption-oriented sectors and easing concerns around energy-intensive industries. Persistent Middle East tensions are severely disrupting global urea export flows, leading to tightening availability and lifting prices across key markets. This situation poses significant procurement challenges for major importers, including India, which could translate into higher agricultural input costs. The increase in fertilizer prices may weigh on the agri-related sector and broader food inflation dynamics, putting the spotlight on companies reliant on stable raw material costs. China's Changshan Memory Technologies saw its shares explode over 465% on the Shanghai A-share market Monday, marking the largest mainland Chinese semiconductor IPO in history and significantly reordering the global memory landscape. This powerful debut puts fresh competitive pressure on established players like Micron Technology, potentially influencing global semiconductor supply chains and keeping Indian IT and chip-dependent manufacturing firms in focus.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now! and share this video. Come and show love and share your happiness. Let's win together.
Foreign institutional investors were net buyers of 755.33 crore rupees. Domestic institutional investors bought a strong 1,664.16 crore rupees. This dual buying pressure suggests a positive market impact today. If we look at yesterday's sectoral data, we see a clear rotation with Nifty IT and Nifty Realty emerging as the two strongest sectors, demonstrating robust gains yesterday and significant weekly momentum, while Nifty Energy and Nifty PSU Bank are conspicuously weakening. This suggests capital is flowing decisively into technology and real estate and out of energy and state-run banking, guiding today's positioning. Global markets are mixed, with strong European gains. However, most of Asia declined sharply, led by Taiwan. US futures are flat. India's Gift Nifty surged over 1%, indicating a strong domestic open despite broader regional weakness. Now let's move on to some stocks highlighted in today's news updates and what's driving their market attention. Leading the focus today is Manipal Health Enterprises, with its initial public offering opening for subscription, marking a significant event for investors. Hindustan Unilever is also in focus after reporting weak first-quarter earnings yesterday, with net profit declining 3%. Cipla will draw attention as it received US FDA approval for a generic drug earlier this week. Asian Paints is expected to see action as the company is scheduled to announce its first-quarter earnings today. Lastly, Hindalco Industries is on the radar. Let's check what the RAS levels are saying about today's Nifty levels. For a potential upside, watch the breakout level at 23,997, while a breakdown could see 23,980 tested. Should Nifty turn bullish, resistance levels are 24,057, 24,117, and 24,177. Conversely, if it falls, support lies at 23,920, 23,859, and 23,799. Today's CPR is extremely narrow at just 8 points, top at 23,999, pivot at 23,994, and bottom at 23,990, suggesting a high momentum breakout day ahead. Analyzing the options matrix and derivative distribution. Analyzing the options matrix and derivative distribution, the impending 2026 August 4 expiry exhibits a pronounced bearish pivot, with max pain firmly anchored at 24,000. The put-call ratio's sharp contraction from 1.069 to 0.8 to 1 unequivocally signals aggressive short positioning and call selling. Significant call open interest at 24,000, now acting as a formidable supply wall, alongside a corresponding put open interest consolidation at 24,000, establishes this level as the pivotal breakdown boundary. Institutional short covering pressure could emerge only above 24,000, while sustained downside momentum targets the 23,000 to 24,000 support range. India VIX closed at 12.56, down by a 0.79% against its previous close of 12.66. This low VIX indicates reduced market volatility, and its fall suggests diminishing fear, which is a positive sign for Nifty as it implies less risk of a sharp market correction from higher levels. The 5-day trend is mixed. The CPR is narrow, which typically means a trending day with a stronger directional move is likely. Gift Nifty opened at 24,298, showing a significant gap up of 312 points compared to Nifty's previous close of 23,985. This substantial gap up suggests a strong bullish sentiment at the open for Nifty today, although confirmation during market hours is essential. The no-trade sideways zone is identified between 23,980 and 23,997, where sideways movement is likely. A move above the breakout level of 23,997 could yield 145 points, reaching 24,142. Conversely, a move below the breakdown level of 23,980 could yield 150 points, reaching 23,829. Previous trading day, Nifty moved 14 points in a bullish direction. The weekly move was 57 points and the monthly move was 88 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today. And now the moment you've been waiting for, today's final market verdict. Despite the Nifty and Bank Nifty closing slightly negative yesterday, down by 0.04% and 0.58% respectively, and the Sensex showing a clear bearish bias, the overall outlook for today looks cautiously optimistic. Nifty futures saw significant long unwinding, but institutional money is flowing in strongly, with foreign institutional investors buying 755.33 crore rupees and domestic institutional investors adding a robust 1,664.16 crore rupees. Globally, while Asian markets are down, European markets are performing well. And importantly, the Gift Nifty is showing a substantial 312.15-point gap up, indicating a strong start for our domestic indices. All major indices are showing a bullish trend according to our proprietary RAS EMA signal. Options data, however, indicates some resistance around 24,000, with heavy call writing there. Weighing these signals together, the strong institutional support and positive global cues from the Gift Nifty are likely to dominate, suggesting a bullish trajectory for the day even as we remain mindful of potential resistance. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Please subscribe and hit that notification bell for your daily updates. If you found our insights useful, a quick like and share would mean the world. We'd love to hear your thoughts and advice in the comments below. Wishing you all a truly prosperous day ahead.